Guys, welcome back to the lecture. In this lecture, we're going to be learning about supply and demand fundamentals. Okay, the foundation of Wyckoff. Um, so we're going to be understanding who creates supply and demand. All right, so let's get started. Well, the simple truth is that the supply and demand in trading is basically when demand exceeds supply, price goes up. Okay, and when supply exceeds demand, price goes down. Okay, so that's it. That's the whole ball game. But here's what where it gets interesting in Wyckoff. Okay, so the critical question you might be asking is that, like, well, not just where but who. Okay, who is creating that demand, who is creating that supply? All right, like, so we're not just looking at where supply and demand are, we are looking at who is creating that supply and demand. All right, now retail traders is they are panicking and buying, emotional decisions, wrong side of the move. But on the institution side, okay, what is happening is like they are quietly accumulating, they are strategically position themselves, and they are in the right side of the move. All right, so in institutional accumulation, what happens is that, like, when institutions are buying, they create demand at lower prices. Okay, not buying all at once, they are buying gradually, and I will show it to you on the chart. Okay, they are testing the market and seeing how much supply is available. Okay, so supply is being absorbed quietly. Okay, so what happens during accumulation is that, first, step one is that institutions are buying gradually. Okay, step two is that they absorb supply. Okay, they are basically absorbing supply. Okay, and then, like, they are pushing the price up like that. Okay, and when step three happens, where selling pressure weakens, then the real move starts, and then eventually there's no more supply to absorb and price must go up. Okay, so I'll actually show you guys this, what is happening here. Okay, so check this out. All right, now as I have this one, you would see step one, institutions are buying gradually. Okay, let's see where the institutions are buying, and I will actually show you guys very cool stuff. We are actually gonna give this candles. We are just basically gonna give uh, name to the face. Okay, so when we say institutions, like, what do we mean by institutions, and, like, how do we track them? Well, first of all, that I told you is that institutions are being seen by the volume, because volume tells you the truth. Okay, so why not just let's just put the volume, and this indicator that I actually uploaded recently, you can see it got a lot of boost. So let me actually go to that one and I'll show you guys. Okay, so I have volume here. All right, so this is called trading truth volume. Okay, I open sourced it 2 days ago. All right, you can see how we are actually giving the name to the face. Okay, so you can read all about it. So purple color is ultra high volume, red is very high volume, um, and then high volume orange, normal volume is your green, low volume is blue, and then silver is very low volume. So you're basically tracking the basically giving name to the face of those institutional buyers or sellers. Okay, so let's add it to favorite, and then let's go to the chart. I'm gonna add this indicator. So volume, trading truth volume there. Okay, so as soon as I add that there, what you see is something profound. Okay, what we observe here is that, uh, let me get this pen. Where is this? when you like cut it out, let's start it again. There we go. So I'll just put it here. Okay. Yeah. Hmm. So see, this very high volume is associated with this like ultra high color of, you know, purple. All right. um, so this, there was institutional selling there, you can see, right? Market came down, then here buying happened around there, and that was your like orange color, you can see those candle here. Okay, so institutions were buying, and then on this one you see this both, boom, very high volume went up, right? Then on the downside you can see supply was being absorbed. You see there's like a lot of normal volume, blue volume, you know, all those one. And then there was only some sort of like, you know, orange which were canceling out. So without going too much in detail, what I'm trying to tell you is that what happens during accumulation is that institutions, they are buying gradually. Okay, they are buying gradually and absorbing the supply. Okay, you see when the market comes down, volume goes up down. When the market goes up, my volume is, you know, increasing. So that's your like, this is where supply is being absorbed, right? And demand is increasing there. Okay, now they absorb the supply, exactly, right? Step 3 is selling pressure weakens. Okay, selling pressure is weakening, you see, right? So eventually when there is no more supply to absorb, you see what they try to do around here, you know, they try to absorb the supply, and then when everything runs out, then the market starts going up. Okay, so price must go up after that, and that's what we have proved here. Okay, so guys, like, you know, telling you guys concept is one thing, and showing it on the chart is the true form of market analysis that I want you guys to understand. Okay, so let's continue. um, then comes the topic of institutional distribution, and what they are doing when institutions are distributing is that, like, when institutions are selling, they create supply at higher prices. Okay, I mean, you can actually take it here, this creates supply at higher prices. You can see here distribution. So one thing you can like and I'll teach you guys in the later chapters, is to actually identify the phase of the, I mean, the accumulation or distribution. So when this is BC, buying climax, automatic rally, this is your, you know, distribution structure. And you see when the market goes up higher, okay, around there, you know, institutions are selling, right? You see, so they actually create supply at higher prices. Check. Okay, they are not selling all at once. Okay, they are selling gradually. Okay, they are selling, then little bit up, then they are selling, then little bit up, then they are selling, then they are actually redistributing. Okay, so they are selling gradually, and they are testing the market. Okay, they are seeing how much demand is out there, and when eventually the demand runs out, then the price must go down. Okay, so we can see it here. All right, so demand is being satisfied around there. So I mean, yeah, I'll teach you guys in more detail later on. Just remember what I'm trying to teach you. Okay, the concept here. What happens during distribution is that, first of all, is that institutions sell gradually, just as the, you know, institutional buyers buy gradually. Step 2 is that they are satisfying the demand. Okay, they are actually satisfying the demand. All those demand is satisfied around here. You can see this big volume. Okay, then third is that the buying pressure weakens. Okay, when eventually the buying pressure weakens, you see, when the buying pressure weakens like that, Okay, market comes down, weekends like that, market comes down. See how the volume is very low on when the market goes up. Like, I mean, you must be wondering, like, and then when the market comes down, then the volume goes up. So, guys, like in market, okay, institutions traders can lie through the price, okay, but they can't lie with the volume. And this is how this trading through volume is revealing their faces. Okay, we are putting name to the faces, okay, or should I say color to the faces. All right, so whenever you see a purple color, that's basically telling you, okay, there is some institutional presence there. Okay, so let's continue. So eventually, when there's no more demand to satisfy, the price must go down, and that's what we see here. Okay, price must go down after that. Okay. So one thing that we got to understand in this lecture is that the volume is telling you the truth. Okay, volume tells a story, and volume is actually an intensity of supply and demand. It's just when you see the volume, you can see the intensity, how intense was the buying or selling pressure there. Here the intensity was, there's a lot of selling that happened there. Okay, then the demand is being absorbed there, and then eventually it gets distributed around there. Okay, so volume is just an is showing you the intensity of supply and demand in the market. Okay, so when there is high volume at level, there's lots of activity, meaning supply is being absorbed or demand is being satisfied. Okay, so when there is strong volume here, what it means is that lots of activity, we can see that, like it's very lot of trading activity. Okay, and then supply is being absorbed or demand is being satisfied. So here basically demand is being satisfied. Okay, meaning when the sellers are selling, they are selling at higher prices, and then, like, people, yeah, it's just like they are distributing to the normal public, when normal public is basically buying or something, and, like, they're, yeah. So low volume at level. See, normal public is buying around here, so low volume at level. There's not much interest. Okay, price can move through easily. That's why price moved through very easily after this. You see how, like, silver color, like blue, and then green. This is normal volume. Okay, you can see that the normal volume there. All right, you see, green color is normal volume, blue is low volume, silver is very low volume. All right. So uh, the dynamic nature of zones is the key insight that we learned in this lecture, is that the supply and demand zones aren't fixed line on a chart. Okay, and I'll show you guys in the later lecture that they are dynamic. Okay, they shift as institutions accumulate and distribute. And you know what, like, let me just show you. Okay, uh, what is all this ball game. Okay, yeah. So if you see, the supply and demand zones aren't fixed lines. Okay, so if I'm just, like, putting my support line there, all right, so they are fixed in here, but they are moving, right? But they are also dynamic in nature, where they shift as institutions accumulate and distribute. So what I'll do, as this is my distribution zone, you see buying climax, automatic rally. What I'll do, I'll actually have a line, this one, pointing downwards like that. Okay, with certain angle of its own, with certain like you know with yeah I'll actually tell you guys what it means, but just imagine this. Okay, you see this and this, right? So what it's telling you is that, like, as it's moving, as it it's dynamic, it's moving. This institutional buying zone is coming down, so whenever the price comes around here, they're gonna passively uh, buy and accumulate or basically take profit, you know and when it breaks through there, it goes down. So all those concepts that you apply on these horizontal lines, you can apply it the same as on these trend lines. So let me apply that. All right. uh, I'll just show you shortly. All right. So as I come to distribution plots, I'm gonna plot this descending one by one. So as I did that, you see how the market is you know creating that. Yeah. So see, small buying occurred, and then the market, when it breaks through, you know, with this very high volume, you see, purple. I mean, this was red, but after that it was purple. You know, then the market just distributed, didn't stop at all. All right. Then what we can do is uh, we can also um, like let me actually put the same for the accumulation as well. Okay. So see those lines there, right? So when the market is you know accumulating, you see this line is shifted towards upside and the buying occurred there. Okay, it was about that, and you can actually see throughout the pattern this trend line was coming down from there, buying occurred. So this is what I wanted to show you. Okay, this is dynamic line, it's not a static line, and I'll teach you guys how to interpret that in the later chapters. Okay, so let's continue. Zone transformation is this happens when after accumulation, you know when after supply zone, when it becomes demand zone. Okay, what was resistance becomes support. Okay, and institutions bought there, so they created that demand, meaning so just very simple thing you guys need to understand is that whenever you see blue shaded area or something, that means in the chart is a buying, institutional buying line. Okay, or institutional buyers energy line, or as I like to call it, institutional buyers floor. Okay. um, then on the red line is just institutional sellers. Okay, you see selling coming there. What happens if when this price gets broken up right there, pulls back, what happens there? Then it actually, what was resistance before, it becomes support. You see, what was supply zone before, it becomes demand zone, and the market goes up from there. Okay, so let's see if the market does this or not. Okay, so let me quickly remove that. See, goes back up, pulls back, then it goes up, right? So this is exactly what's happening, guys. Okay, you see, now this. Okay, so see here, if you notice, you know market went up a little bit, pulls back, and then as the buying was coming, this supply zone was becoming demand zone and the market went up. Okay, now here it actually sell, so market came down, and then this demand zone that was there right now, it's actually a resistance zone, supply zone basically, that's being formed, and you can actually see it there in this line. So if this line is your demand zone, yeah, the market is trading below that, that becomes your supply zone. Okay, yeah, and here why this happened, no, I can actually show it to you. When this line gets around there, market actually comes down. Let's check it out. See, what I told you. And I, by the way, I actually didn't knew that like this was the case because we are doing forward testing, right? So you can see like this, the distribution above, this line was coming dynamically because it's a dynamic zone. As soon as the market comes around here, you see the volume spike there, right? And the market just comes down, stays there. And let's see how it behaves then. Okay. um, i'll actually I'll actually put both the support and resistance, like, and we'll see what happens. Dynamic support and resistance. Okay. So see, here this was resistance. So like, it's really, this demand zone is becoming a supply zone. Here you see, after distribution, you see, the demand zone becomes supply zone, and what was support becomes resistance. Institutions sold there, so they created the supply. Okay. So see, here, there, right there, there, market comes down. All right, and this line was coming down from there already. Okay. So let's move on. So the practical questions, practical application questions we might be asking, after all this, is that where is supply being absorbed? Okay. And that's where accumulation is happening. So if the supply is being absorbed here, okay, uh, all right, around here, then there is accumulation happening. Okay. So you can see as the market is coming down, volume is decreasing, and that's the volume, what market is going back up, market is volume is increasing. Okay. And you can actually see it here. I'll actually teach you guys later on, but you can see that here. You see, this is the volume, wave volume. All right. As we actually interpret the market as wave, um, you know you see this wave, uh, we can see as the market is going up, right? As the market is going up, uh, the wave volume is increasing, it's greater than that. You see, then it's coming down, it increases, but like it's not like, then again it increased, right? Volume on the down was less, then it again went up, right? So here this was long, but still market couldn't go down, and then it up wave actually biased, demand matched that supply is being absorbed, we can see that. All right. um, so that's where accumulation is happening. So we know that like accumulation is happening around there. Okay. And as I run through it, we can take some long trade when the opportunity presents. Okay. So when we overcome this resistance there, okay, then we can actually take trade on the long side when, when we see large buying occurring. Okay. So around blue area, like that. Okay. So new distribution phase got started, and this was your reaccumulation, and the market just went up. This is your markup phase that's starting now. You see. And don't worry guys, I'm going to teach you about markup phase later on. But you see how the market is actually following this ascending trend line, right? It's just going with that ascending uh, supply and demand zone. Okay. So yeah. So where there is demand being satisfied, that's where the distribution is happening. Okay. So when the supply is being demand is being satisfied, that's where your distribution is happening. All right. So where did supply get exhausted? you know Let me actually remove that. I don't want to confuse you guys with this one right now. Like, I mean, um, you will get this indicator, don't worry. um, yeah. So the next question is, where did supply get exhausted? you know when we ask this question and we need answer to that, that's when we know it's like, price is breaking out. when supply is getting exhausted around here. You see, all this supply is getting exhausted. All right. You see this big volume, boom, boom. That's when the price breaks out. Okay. And where did demand get exhausted? That's where the price breaks down. You see around here. Let me actually show you. You see, where did demand get exhausted? Yeah. See, very heavy selling, guys. That's where price breaks down. Because if this is a demand line, all right, and if the market is, the demand is getting exhausted, there's a lot of supply coming, then price is breaking down. It's like price must go down after the demand is being exhausted. Okay, so key takeaways from this lecture is that supply and demand in Wyckoff, it's not about drawing lines. Okay, it's about understanding the flow. Okay, and who's buying, who's selling, and what happens when one side exhausts. Okay, so we will discuss this in much more detail later on. All right, but you need to understand that supply and demand is not about drawing lines. Okay, it's understanding the flow of um, the volume. Okay, the flow of the market. All right, so what's next? In the next lecture, I'm going to teach you guys 4 phases of the market. Okay, this is the framework that everything else is built on: accumulation, markup, distribution, and markdown. So supply and demand is very fundamental to the next lecture. Okay, if you want to understand more, go back to this lecture and you know um, learn more. Because guys, like, so far you might have seen, like, in other lecture and stuff, they're going to teach you theory or they're going to teach you practical. What I'm trying to do here is that I'm going to teach you guys theory and practical both in the same both in the same time. All right, so that you actually have all the abilities to apply them in the market in real time. Okay, all right, so follow the flow and understand supply and demand from an institutional perspective. Okay, think. We need to understand the supply and demand from those smart money, institutional, composite operator perspective, and after that only we will master the flow of the market. Okay, so thank you guys for watching, and I'll see you guys in the next one. Thank you.